Good morning and welcome to the area Securities Markets Update. Beginning with the Asian session today, eyes were directly focused on the jobs report from New Zealand, which had outcome with mostly positive but mixed outcomes. First, the employment change has come in much less than expected, rising by 0.4% in the second quarter of this year, comparing to a rise of 0.9% in the first quarter, while it had been anticipated to rise by 0.7%. Secondly, the unemployment rate fell sharply to 5.6% in the second quarter, while it had been anticipated also to decline toward 5.8. The Q1 also data has been revised down to 5.9 from 6%, which is the lowest unemployment rate since 2009. Finally, the labor cost index for the second quarter has come in higher than expected, rising by 0.6% in the second quarter comparing to 0.3% in the first quarter, while the estimates were to rise by 0.5%. Despite the positive data of the positive jobs report, Kiwi managed to tumble yesterday and reached as low as 0.8424 until this report is released, and the pair also broke below its 100-day moving average, testing the major trendline support at the current low. The major factor for the current decline is the GDT auction results that came out yesterday. Whole milk powder prices fell by 11.5%, and the global dairy also trade prices tumbled by 8.4%, and finally the global dairy trade average prices came in at 3,024 per metric tons. Meanwhile, a daily close below the 0.8420 is likely to clear the way for further declines below 84. During the European session ahead, there are a collection of economic releases will be released from Germany, Switzerland, Italy, and the UK, which are likely to have a notable impact on the markets. Beginning with Germany, factory orders are expected to rise by 0.5% in June after a sharp decline of 1.7% in May, which would be the highest in 2 months. In Switzerland, deflation is likely to continue. The month-over-month CPI is expected to decline for the second month in a row by 0.5% in July after a decline of 0.1% in June, which would be the lowest reading since August of 2012. However, the year-over-year CPI may remain unchanged or with no growth for the second month in a row. In Italy, industrial production is expected to rise by 0.9% in June after a sharp decline of 1.2% in May, which also would be the highest monthly reading since January. The Italian Q2 GDP also will be released today, and the estimates are to grow by 0.1% in the second quarter after the economy shrank by 0.1% in the first quarter. The economy, however, is still in a recession and has not had any 2 consecutive quarters of growth since the second half of 2011. In the UK, manufacturing production may rise by 0.7% in June after a decline or a sharp decline of 1.3% in May, which would be also the highest reading since May. Finally, the UK industrial production is expected to rise by 0.6% in June comparing to a decline of 0.7% in May, and would be again the highest monthly reading since April of this year. As for the US session today, we will be focusing on the US and Canada trade balance deficits. Canadian trade balance deficit may narrow slightly to 0.1 billion in June, down from 0.2 billion in May, while the US trade balance deficit may narrow slightly to minus $44.2 billion in June, down from minus $44.4 billion in May. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching.